In other words, the moment the market stops overpaying for their Bitcoin, everything flips. But then there's the other outcome, right? The not so good one. And here's where they show what happens if the stock ever trades at a discount to their Bitcoin. Remember, that's when the MNAV is below ×1, right? It says sell Bitcoin derivatives. In other words, the moment the market stops overpaying for their Bitcoin, everything flips. They stop issuing shares, because that would be like selling $1 of Bitcoin for 80 to 90 cents. You don't want to be selling your Bitcoin at a discount to anyone, right? And if the cash reserves are not enough and they run out, the only way to keep paying those preferred dividend investors is to start selling pieces of the Bitcoin pile. That is the structural comparison that people say looks a lot like a modern version of what could end up becoming the death spiral. And by the way, the death spiral looks like this. Once the cash pile runs dry, they're forced to sell Bitcoin. Selling Bitcoin pushes the price down, which makes the company worth less, which means they have to sell even more Bitcoin later to fund their debt obligations. So it has this cascading effect, especially when the stock is not trading above MNAV. That just means investors would not be willing to pay a premium for the company, which could realistically end up happening, and that would be very bad for the entire industry and, of course, the price of Bitcoin.